Hello, my name is Gobika Nair and I'm a first year PGP student at IIM Trichy. My Indian economic policy video is on the various issues that the banking sector in India is facing and the various steps that can be taken to improve the same. The Indian banking system consists of 20 public sector banks, 22 private sector banks, 44 foreign banks, 44 regional banks, around 1,500 urban cooperative banks, and almost 9,500 rural cooperative banks. As per the Reserve Bank of India, India's banking sector is sufficiently capitalized and well regulated. Credit, market, and liquidity risk studies suggest that Indian banks are generally resilient and have withstood the global downturn well. In the financial year 2017 to 18, a total lending increased at a CAGR of 10.94% and total deposits increased at a CAGR of 11.66%. India's retail credit market is the fourth largest in the emerging countries around the world. It increased to around $281 billion on December 2017 from $181 billion on December 2014. The infograph shows the market size and the sector composition of the Indian banking sector. Taking a look at the breakup of the banks in India, it can be seen that the regional rural banks occupy the largest share with that is about 38.13%, followed by foreign banks. The public sector banks occupy the least share in the number of banks in India at just 12.95%. But the assets being held by the different banks show a totally different story. As can be seen from the market size infograph, the total banking assets has been growing slowly from the financial year 2013 to 2018. And the public sector banks hold the major share, followed by the private sector banks. A fall can also be seen as we move from financial year 2018 to 2019. The interest income growth in the US billion dollars that is shown can also be seen with a small growth from financial year 2011 to 2018. Here also, public sector banks occupy a bigger chunk of the income when compared to the private sector or the foreign banks. Now, let's take a look at the various challenges that the Indian banking sector faces. The first one, NPAs or non-performing assets. NPAs are loans and advances where the borrower has stopped making interest or principal repayments for over 90 days. In the last few years, gross NPAs of banks as a percentage of total loans have increased from 2.3% of the total loans in 2008 to 9.3% in 2017. As of March 31st, 2018, provisional estimates suggest that the total volume of gross NPAs in the economy stands at Rs 10.35 lakh crore. About 85% of these NPAs are from loans and advances of the public sector banks. For instance, NPAs in the State Bank of India are worth 2.23 lakh crore. Out of the total NPAs in the country, more than 70% are from the corporate sector. These include cases which have been found to default due to intentional mismanagement of funds or fraud. The worrying part is that only 12 companies constitute more than 25% of NPAs in the country. On the other hand, farmers or agricultural area have been recorded to default on only 8% of the total NPAs. Indian farmers have protested for easing their repayment guidelines and for a waiver in some cases. The reason for these NPAs being formed is the lack of infrastructure, monsoon failures, non-implementation of MSPs for their crops, etc. The next challenge faced by the Indian banking sector is related to the rural markets. There have been some ambitious targets set by the government to integrate the 69% of the rural population into the conventional banking systems by providing them access to bank accounts, etc. But even if everyone gets access to the bank account, many villages do not have adequate branches or ATMs to feed the market. Currently, the banking sector does not have the infrastructure to reach out to the market at the bottom of the pyramid. Most of the rural branches are running at a loss because of high overheads and prevalence of barter system in most parts of the rural India. Many economists state that the infrastructure will always be inadequate owing to a large population, but there is a need for better supervision and monitoring framework. The next challenge is related to the priority sector lending. Priority sector lending refers to those sectors of the economy which may not get in timely and adequate crediting in absence of this special dispensation, like agriculture, small scale industries, cottage sector, tiny sector, export sector, etc. As per the RBI directive, commercial banks are advised to grant 40% of their total advances to borrowers in the priority sectors. However, in many of these sectors, the returns are low due to various reasons, like rainfall in case of agriculture or seasonality of the goods in case of small industries or cottage sector. Hence, these loans turn into NPAs, straining the profitability of the banks. Now, let's take a look at the various improvements that can be done in the Indian banking sector. The Indian banks are increasingly focusing on adopting integrated approach to risk management. The NPAs of commercial banks has recorded a recovery of about 4 lakh crore rupees in the financial year 2019, which is the highest in the last 4 years. Reserve Bank of India has decided to set up public credit registry, an extensive database of credit information which is accessible to all stakeholders. The Insolvency and Bankruptcy Code Amendment Ordinance 2017 bill has been passed and is expected to strengthen the banking sector. Deposits under the Pradhan Mantri Jan Dhan Yojana stood at about 1.06 lakh crore with 37.34 crore accounts registered. In May 2018, the Government of India provided ₹6 lakh crore loans to about 120 million beneficiaries under the Mudra scheme. As of November 2019, the total number of subscribers was 19 million under Atal Pension Yojana. The total equity funding of microfinance sector grew at the rate of 42 year-on-year to rupees 14,206 crore in 2018-19. Rising incomes are expected to enhance the need for banking services in rural areas and therefore drive the growth of the sector. As of September 2018, Department of Financial Services, Ministry of Finance and National Informatics Center launched the Jan Dhan Darshak as a part of Financial Inclusion Initiative. It is a mobile app to help people locate financial services in India. The digital payments revolution will trigger massive changes in the way credit is dispersed in India. Debit cards have radically replaced credit cards as a preferred payment mode in India after demonetization. Transactions through UPI stood at about 1.2 billion in November 2019, worth rupees 1.89 lakh crores. These are the references used to create this video. Thank you.